Hello from Otet Markets. This is Ron. Will be with you with the global economic outlook in the week ahead, which is going to be the week number 22nd in 2025. As always, let's have a short review on what happened last week, which ended with the very amazing and interesting comment from President Trump treating European with the 50% tariffs, and also the American companies who they produce their products out of the US and they want to enter them and excel in the US market. Which affected the market very badly. Though, on the other hand, let's to have it just like check other economic data. We had too many other economic data, especially the PMI numbers. We had PMI numbers mostly from most European and American, generally from most developed and developing economies. Generally, what we saw in Europe, composite PMI, service PMI, and manufacturing PMI, all of them in for whole as in Europe as a whole, they missed the expectations. On the other hand, in British economy, we saw some positive data, and especially for the in the GDP numbers. But inflation, on the other hand, also in United Kingdom increased by 1.2%. In Canada, inflation increased by 0.5%. The core inflation, but headline inflation fell by 0.1%. Other important data in Japan, we had lower, the trade balance fell sharply with the low increase of exports or slower exports. Generally that, but on the other hand, in United States, we had very good, amazing PMI numbers, while the housing market also was mixed with the pending home sales, with the just like the existing home sales, which fell by 0.5%, while on the other hand, new home sales increased amazingly, to show that while the mortgage rate increasing at the same time, the new builders and generally the builders for the new houses, they are giving amazing opportunities for buyers. So that's why the buyers, they're gonna have more interest to buy the new houses despite the higher interest rates. Generally, the data that we had previous week in United States was somehow a little bit positive out of the US. In UK also, we can say it was a so positive, not so good. But in Europe, we lost the hopes one more time. While on the other hand, if you look on the initial the job labor market in the United States, you can see the initial or we can say initial jobless claims actually fell by 3,000 compared with the 2,000 actually compared with the week before to 227,000 requests for to use the unemployment benefits, which means that the U.S. labor market is still improving. For the week ahead, while we are entering to the week with the, as mentioned, with the new tariff treats on European, at the same time, things that happening is that at the same time, what we have actually here is the economic data to watch. GDP and inflation numbers in the week ahead will be the most common data that we're going to have from the most economies. While in New Zealand, we will have a central bank meeting where we're expecting to see Reserve Bank of New Zealand to cut their rates by 25 basis points to 3.25% on Wednesday. On Wednesday to 3.25 basis percent from 3.50% actually, sorry. But since the market already priced on this 25 basis point rate cut, the market now going to actually much more watch and see closely what the central banker says and what we can see in the statement. What's their plan for the later rates cuts? Because further rates cuts, because inflation already again started to increase somehow, which means it can treat the further path of rate cut. But however, for now, there is no doubt almost more than 95% chance for 25 basis rate cut, for 25 basis point rate cut, which is going probably to happen with almost no doubt. In United States, We will start the week with disappointing. We are expecting actually to start the week with disappointing durable goods orders with 0.8% fall. Actually, the previous month we had 9.2% increase in orders mostly because of non-defense airplanes. But that's why for lower lower orders in this area, that's why we expect to see overall orders to fall by 8%. However, excluding if we exclude the defense, if we exclude the air transportations, we can see that durable goods orders is going to be flat around 0%. Consumer confidence expected to fall more from 88.7% to 87 point some, which means that the customers actually not still the customers continuing their concern about the effect of the tariffs, effect of the trade war, and ongoing geopolitical tension on the U.S. economy. So that's why it can trade somehow the consumer confidence. That same effect that we expect to see on the other parts, especially for example, if we go further and see the Thursdays and then Fridays. Sorry, we can say the Thursday and Fridays. GDP and PC price index. We expect to see for the first quarter, we expect to have the PC price index, personal income and expectations data for the first quarter, which expected to see that the PC price and core PC price both to stay unchanged at 3.7% and 3.5%, which means that inflation still can be the concern in the United States, especially with ongoing tariffs. We don't know what's going to happen. Pending home sales is expected to slightly fall mostly because lower inventories, but the focus in the United States will be on Friday's data, where we are going to have the personal income and spending data numbers for April, where we expect to see 0.2%, repeating the 0.2% monthly increase, which means it can increase between 0.1 and 0.2% in different expectations, which means that the core inflation and headline inflation for personal spending can stay unchanged at 2.3 and 2.6% respectively. Generally, we expect to see the income to increase by 0.5% again, but spending to fall to 0.2% after previous month's 0.7% increase. Generally, with the data that we're expecting to see in the United States, generally the data going to be somehow the flat and disappointing compared with the previous weeks that we had a very good, not very good, we had a positive and good numbers. In the week ahead, we are somehow disappointed. We are somehow, we are somehow a little bit negative about the ongoing data. In China, we're going to have the PMI numbers for both manufacturing and non-manufacturing on Saturday, where we expect to see lower digits, especially for manufacturing under 50 expansions area. In other economies, for example, in Canada, we're going to have the GDP numbers in Eurozone as well. In Eurozone, as total for the Eurozone and also for the European economies, including GDP numbers from Germany, Italy, Spain, and also the inflation numbers from Germany, where we expect to see the inflation is increasing slightly from 1.9% slightly in Italy from 1.9% to 2.1%, and in Germany from 2.1% to 2.2% slightly a little bit higher. I mean, the inflation is going to stay unchanged or a little bit higher. While in the euros in Germany, we're going to have the retail sales also. We expect to see 0.3% increase in retail sales after 0.2% fall in previous week. Generally, the data we are expecting to see from the Eurozone, we don't have too much data, but from the Eurozone economy, European economies, we're going to have some data. But generally, the data again, it's not going to be so positive. Especially, for example, economic sentiment in Eurozone expected to increase from 93.6 to 94, but still it's much way lower on 100 expansions area, which means that the Eurozone economy still can be under pressure, especially with the consumer confidence at -15, which is lower than 0. Yeah, that's the generally what we expect to see in a week ahead. Let's go and see the charts and check what how these data can affect the charts. Starting with the Bitcoin chart, where let's share the charts here. Starting with the Bitcoin chart, Bitcoin touched a new highs after positive comments from White House and Senate previous week, which talked mostly about. New expectation, I mean, new the spot expectations, new payment expectation, and also the government new rules and the new regulations. Generally, the data we had and news and the data we had from different parts from the United States and other for the cryptocurrencies, they were positive. And also at the same time, uncertainty in other markets, especially in the cryptocurrency in stock markets, increased the crypto demand. While at the same time, we can say that the uncertainty, geopolitical uncertainty, especially also the inflation uncertainty, also all of they were all the reasons that to increase the demand. But then we can say we could see that the big income especially like BlackRock, they bought again new cryptos. So we had a much more new money flows to the ETFs. So that's what they all of these reasons they help the Bitcoin to touch and record the new highs. We talked about that previous week, and we talked that as long as it's trading around above 101,000, we can expect 104 and also 108 and 111,000 that we talked about that previous week. Continuing with the US dollar index, with ongoing data in US dollar market, in US market, we can say that US dollar, as we talked previous week, between 99 and 101 is the area that we're the 909 and 100, not 99 and 101 is the area that we expect to see US dollar index for the week ahead. Generally, the data that we expect to see from the United States in the week ahead, as mentioned earlier, they are somehow flat and negative. That's why they can put some pressure on the US dollar index. So after this, but at the same time, ongoing the geopolitical tensions and other data, they can increase, especially in developing economies, the uncertainties that we have in the developing economies. And I mean, just like when we have uncertainty in the developing economies or the other countries out of the US, they can increase the demand for US dollar because some of their nations, they don't trust in their currency, so they're going to buy more US dollars. So not just domestic, just we can say the US dollar index out of the US also, US dollar for out of the US also can have some demand which can support the US dollar price. So that's why we can say that these data, they can somehow these, I mean, there are too many reasons that they can be against of each other. That's why we can say that, okay, US dollar index for now, it can be somehow flat between 99 and 101 for now, as long as we have any other reason to say that, okay, that's the time to change our outlook. About the gold market, previous weeks also we talked about that. For now, with slight pressure on the US dollar index, with slight pressure on the stock markets, with ongoing geopolitical tensions, with the central banks buying, with the new trade on the tariffs on European by President Trump, with the new budget, which can increase the deficit in US dollar budget, US government, federal government budget. So all of them, they can increase the uncertainty in the economy, then increase the demand for the gold. On the other hand, higher for longer can increase actually the yields, the bond yields, which can be the negative side for dollar index actually, for gold actually. Don't forget about that. But still, it cannot be that much. So that's why we can say that, okay, the uptrend, slight uptrend still can continue there. Same reason can be the negative for oil, especially the ongoing expectation for the economic growth. They can put the pressure on the oil, but at the same time, ongoing geopolitical tension, especially in the Middle East, also can hold the data, just like can hold the market in the same level. So that's why it's between $60 and $64 for now, same as the previous week's talks. We can expect to continue the same area for dollar for oil, for especially for WTI between $60 and $64. About the stock markets, geopolitical tensions, trade tensions, and new budget law, all of them, they're all negative for the stock markets for now. That's why we expect to see this ongoing downtrend, which started a few days ago, to continue. Next target can be around 5,750 and then 5,000. 630, 640, but lower for end of this week. I probably expect to see about the 50% to touch again back this 50% Fibonacci level around 5,450. That's expectation for S&P 500. Same trend we expect to see in other stock market, in other indices as well, especially like US dollar, especially like Nasdaq and Dow Jones as well. Yeah, that's what happened in the stock and generally in the financial markets last week and what we can expect for the week ahead. If you had any other question, any more question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.